board, Vijay Thadani, the Vice Chairman and MD at NIIT, joining in on the show right now to talk about how their performance has been. Mr. Thadani, great to have you today on ET Now. Thank you so much for your time. Help us understand what the quarter gone by was looking like and what kind of visibility you have going forward.
Right. First of all, we are talking about NIIT Learning Systems today. And we announced NIIT Limited a few days ago, but NIIT Learning Systems, I think we've had a decent quarter. Our revenue has gone up by 25% year on year, and EBITDA has improved by, margin is at 18.3%. PAT is also strong, and EPS is at 4.17. I think it's also backed by a large number of contracts that we have, which is we got 3 new long-term annuity contracts, and we also had a renewal of 3 very large contracts earlier, as well as expansion of one of the contracts. So very decent quarter and order intake and deals intake. And I think this is all backed by, while there is softness on the job front and the uncertainty of the environment, but that aside, I think it's the AI-led initiatives which are actually gathering momentum. And the fact that we made early investments and we've had a pole position on this, especially of AI and learning, I think that's what is contributing to the whole thing. I also see on the screen that you are also sharing how different segments of market have responded to our offerings. Industrials, BFSI, and life sciences are leading. Of course, technology has always been on the forefront. But this time, technology was a little trifle slower, but not in an overall sense. So I think the outlook is looking good, but the environment is very tough. So we are maintaining the guidance that we had given of high single-digit growth for the year and margins from 18 to 20%. So that's what we have stated also. So we are very bullish about the AI-led initiatives and some new launches that we have done, which are met with some very encouraging response.
Mr. Thadani, hi, morning. Your revenues grew 25%, but organically it grew 11%. Do you see the kind of growth coming in organically going into the full year?
Yeah, see, we did 2 very interesting additions to our family, which is 2 acquisitions. One, a company in Germany, and that contributed immediately in the very first year through a major win from an auto major in Germany. And the second is a company which is in California as well as in Costa Rica, which is in AI-led outcome-based learning capabilities, building those. And there also we have had a significant win with one of our customers. So both these have contributed a great deal. These acquisitions are getting integrated in the company very quickly, and that's why we are now talking about the overall growth. Of course, the existing customers that we have, they've grown well. There was a little softness because of the exit of one large customer. That's a contract which expired or got over because that service stopped. It was in Canada with the real estate regulator. That was a large 5-year contract which went on for 8 years, but after that the government changed the law, and therefore that contract doesn't exist. So that impact is felt in the organic, but if you take that impact out, we grew 18% year on year and 5% in organic terms. So even in organic, the growth was fairly decent. But these new acquisitions and their integration in the company is also helping us a lot.
Tell me, Mr. Thadani, going forward, how much of NIIT's growth is going to be organic versus acquisition-led? Is there any indication of what that mix is going to look like?
Okay. Acquisitions, though in number they are large, but 2 versus 1 NIIT. but in impact, they are very small in the first year. But we hope that because these are specific capabilities or specific geographies that we have entered in, I think over a period of time, all these will become a part of the exercise, and our trajectory in the past, and we also believe in medium term, we'll settle on is 20% growth, 20% margin. That's what we have historically demonstrated, other than this environment uncertainty. The AI-led initiatives and the market position we have in that space, it gives us a lot of confidence in a couple of years. Of course, environment aside, we should be back on similar trajectory.
So what is the levers that you have to move up to a margin guidance of 18 to 20% that you have enlisted for FY27? Currently, at the end of Q1, it was around 16.4%.
Well, at the end of Q1, it was 18.3%, our EBITDA margin. And we believe that during the year, it will be 18 to 20%. The reason is that one of the acquisitions or the new additions to our family, they are in the process of settling down. And as they have settled down, they have contributed this quarter itself with very good results. So I think their contribution will increase, and that will also significantly contribute to the margin. There are other efficiency initiatives. And lastly, the AI-led initiatives, which have contributed 13% to the revenue, they are typically coming in at a higher margin because of the uniqueness of our offering, as well as the specialty, as well as new business models that are emerging.
And Mr. Thadani, I wonder whether anything is changing on ground from a competition perspective, as well as from a capability perspective that your customers are asking from you in terms of AI-based learning and the like. How is that being integrated to part of the service offerings that you have?
That's a very good question. I think a number of our competitions are themselves, those who were late to the party for AI, are struggling, but I'm sure they will also find their way. But this gives us an opportunity to strengthen our market position. So our win rates are very high, and they've been historically higher, but in these recent times have been very high and good. The deal pipeline is also strong. What do our customers ask? The customers were earlier looking at L&D outsourcing as a service that they needed from us, which means they wanted their learning and development function to be run in more efficient manner and obviously at a lower cost and deliver higher benefits. Now the customers are asking for business outcomes. And I think we are very happy because then we can relate our offerings to their business outcomes and therefore our pricing in a small way as well. AI and how AI will change their life is a very important question. So the important question is, what is your strategy and what investments are you making in staying ahead of the curve? This is a discussion which we have very, very often. So in this process, we have been able to showcase some very comprehensive solutions which have made a very distinct difference to their top lines and bottom lines, direct correlation. And I think that makes them very happy. We believe that more customers will listen to that, and will respond to our offerings. And I think we should therefore have a stronger position.
Sure they will. Mr. Thadani, great to have you today on ET Now. Thank you as always for your time.
Thank you very much. Thank you. Great speaking with you.